Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, July the 16th, year 2018. Let's talk trading. Why? Many of the questions I get start or contain the word why. They start out, why this? Or it's like, do you know why? In fact, I got one. Do you know why Ford is going down? The company stock. And the thing is, it's so easy to get caught up in the why. But you see, the why is the past. Sometimes it's also the present. Why something's happening might be because of something else is happening at the moment. Why am I getting wet? Because it's raining. I'm standing outside. That's why. But when it comes to trading, the why is doesn't really matter. What matters is if you have a trade on, whether or not the trade's going in your direction. If you put a trade on and it goes in your direction, do you ever ask why? Or are you just sitting there with a big old, cheesy grin on your face, looking at that green get greener? It's usually when the red's getting redder is when you're going, why? Why is it dropping? Why is it going against me? Why? Why does this always happen? So the point is, let's not even concern ourselves with the why. Why is, usually just history. What we need to concern ourselves with is what is happening right now. And one of the things that needs to be happening is that you always need to be employing, flawless money and risk management. And it's really simple to do. You decide how much you're willing to lose each trade, and you adjust your position size or stop loss accordingly. And when that number's hit in the negative, that's when you exit the trade. You don't ask why, you just do. And so, as you can see from the last video, I think it was around 112.50, so we're off about 15 pips. Let's see, off of the monthly high here. 20 pips. So you can see here, that's the daily high, not monthly high. Maybe I should change that to monthly. Since this is monthly, I'll show you guys how to do that. Right here, my period. I need to update this indicator because not everybody knows 4320 off the top of their head. So you can see here we're 44 pips off of that, 45 pips off of that monthly high. Here we've got the weekly. Looks like we're just inside that weekly wick zone. Looks like it wants to head it back out. Right there. Oh, see, we're right there on the line. And for those of you just tuning in, all the weekly gaps have filled. They were filled yesterday, which is, well, it's still Monday technically in market, but where I live, it was Sunday. So the first trading day of the week has not completed. And you can see here right where we are. It looks like we're almost going to be in that daily wick zone. We can look at that in a moment. And here we have the buy zone triggers. Right there we had one solid buy zone trade. This one you'd be going against the H1 candle color right here if you went long. That's for pro traders. You see here it came down, pulled back. That was another opportunity. To take 5 to 7 pips or more. Maybe about 9 pips out of that trade right there. Harry hindsight, right? And you can see here with the 36, 37 pip range, the rat zone not in effect, but we did take out the pivot. You can see right here. But then looking to target this weekly pivot here. And we've got a missed pivot there, which we will show you here. And here's the two most recent missed pivots. And once again, we can look at here. One ball on the bottom, green at the line. One ball at the top, red at the line. One ball at the bottom, wasn't green at the line, but it was green at the line there. But it pulled back. You see it didn't. Right here, you see that? It couldn't sustain even that little wick. So that should have been a scratch. Here we go. Once again, trading the H1 candle colors at the previous daily session or previous daily candles. 5 lines, high, mid, open, close, and low. Which, once again, candle top, candle bottom, candle high, candle low. We've got wick zones, and price doesn't like staying in the wick zone. As you can see here. Holo. Now, hand grenade trade right there. Close but no cigar, right? There we have that highest open. Boom. Now, if you had done the M15 right there, you can see that would have been the highest. Actually, that's the highest M15 open right there. But you can see here, going up, going down. Because we use H1 opens. And you can see here, price is oscillating about a 5 pip or so range. Inventory reduction bars, there's a short there. You can see there was a short called right here, and now it's pulled back. So if anything, that would be a scratch trade, or maybe just a few pips. And the daily, weekly, monthly, open, high, low lines, as you guys know, like the horizontal lines. Why? Because these lines don't move. That's why. Once they're in for the day, week, or month, and you can just trade accordingly. And it doesn't matter. They're the same. Doesn't matter what time frame you look. You can see here the lines are not moving, even on the daily. They didn't move, even though the chart did what it did. But nope, they don't move. That's why I like them. Finally, Einstein lines. You can see here there was a short relative to when I started. Right here, there was a long relative to when I started, another short, and another short. So relative to when I opened up this chart, price is down. Very simple stuff. So that's it, fellow traders. Why? Don't worry about the why, because it's not what you trade, it's how you trade it. Let's all go drain the banks.